So is this the time to buy some Meta stock? Well, welcome back, first of all, traders and investors, to Wealth Down with me, Norbert Menhardt, where I build and protect wealth. And in today's video, obviously, we're going to ask the question and analyze on technical and fundamental levels Meta platforms, the Meta stock. Is this a buy? Is this a sell? Should we hold on to the stock? What should we do? The question is simple. After a massive run-up and recent volatility, is this the right time to buy some Meta stock? So let's go over, first of all, the Q3 earnings report. Once more, I did a deep dive of the report when they released it, but we need to revisit it because the stock went down and we need to analyze this once more in order for us to make the best determination. What is best for us? What is best for us to build and protect our wealth? So let's get started with performance. Revenue up 26%. With the core business of Meta being a cash flow machine right now. Revenue, as I said, up 26% to roughly over 51 billion. Daily active users, the DAU, up 7%, which is 3.27 billion. So it's half of the population of the earth are using some kind of services from Meta, whether it's Facebook, Instagram, Reels, WhatsApp, and WhatsApp is killing it. So that's their family app, and they are scaling rather competitive. Okay, they have a massive competitive advantage. Who's the competition? Well, Snapchat is not their competition, Pinterest is not their competition, and those are two public companies. Is maybe TikTok the competition? Well, there's also competition for TikTok, but who knows what the real numbers are because they're not a publicly traded company. So profitability, let's talk a little bit about profitability. Meta platforms, the operating margin is robust with 40%, and this is a key indicator for pricing power. Just remember, if the profitability is robust, then they can increase prices for the ads. And that's how they remain profitable. And also their balance sheet, where we see a lot of strains. Meta holds over 44 billion, that's B with the billion, in cash and marketable securities. This obviously ensures strong liquidity and capability to weather any kind of strong financial downturns or some kind of storm in the core pylons. And that's why I like it. That's why I'm including this in our Wealth Down portfolio manager. So for disclosure, I do own some Meta stock, but the question is now, should we add some more at least to Wealth Down's portfolio, or should you add some more, or even try to buy into the stock right now at the current levels? Remember, value is what you get, price is what you pay for that value. So price is very important. So let's take a look at the elephant in the room. Look at this AI-generated elephant. Capital expenditure and AI investment. So the bear case is the following. Q3 report showed us that they are increasing capital expenditure, and the stock did a 11-ish% nose dive down here right after the earnings, and then they continued with the following market overall correction, their path. Now we're currently sitting at 647, coming down from over 800. Now, why did they do this massive nosedive? Simply because they expressed capital expenditure to increase in 2025 between 70 and 72 billion, and they are going to continue with this into 2026. So our perspective on this, that this is a thumbs up. This is perfect. That's what we want from there, because they're already showing us with AI generated, or AI are used to generate better and better ads, which then gives you as an investor better, or as a marketer on their platform, a better ROI, return on your investment, and you want to spend them more, which is going to increase their revenue. So this is where we differ from the short-term trends. With the short-term trend is, let's take back a look at, and we're also going to do a technical analysis on this after we're done with the fundamentals, that the stock did a nosedive and also followed the market with the entire nosedive in there, and building on extensive AI computing infrastructure is where I like this little fellow called CEO of Meta Mark Zuckerberg, the king of the markets. I like that he is positioning Meta to be the leader in the next evolution of computing. Now, this isn't frivolous spending what this guy is doing. I believe at least it's a necessary strategic investment to solidify the competitive position in the AI race and enhance monetization throughout superior ad targeting tools. The only problem that they have, and this is why they're investing so much into those Meta glasses, because they don't have a device, okay? Apple has a device. Even Google has a device. This is why I also like Google stock massively. Not at these prices. It could go even higher, but it's kind of overbought them, in my humble opinion. But they sadly don't have a device, and this is why he's pounding those glasses so hard. I do not think that the glasses will be the next thing, and I need to see him make an amazing deal with somebody. Now, sadly, Google already made the deal with Apple. So what remains to be seen is what they're going to do with their labs. Now, let's focus on the analysis. Currently, the 12-month target, and this is what Wall Street thinks about the 12-month targets, is somewhere around $839 per share, okay? Now, with a strong consensus here of buy, the long-term upside is clearly recognized despite the short-term cash flow concerns. Now, on the higher end, on the max end, we could still see a $11,000 a share stock. I wouldn't bet on it. They still need to come out with a device on do some miracle. And on the downturn, we see a negative 5.86%. So I think we should now get into some technical analysis and stop this presentation. And let's see where are the best levels to maybe enter a new trade with Meta platform. So let's start with some technical levels here. We are currently on the weekly chart, and we can see Meta hitting that 100-day moving average, perfectly bouncing off of it. Now, this is the weeklies, not the dailies. So we have above us a bit of a resistance with the 50-day moving average and the 20-day moving average. Last time we saw this was back in April. Now, could Meta come down once more and retest this area right here, the 500-ish or 600-ish, more $600 per share range? Yes, it could, and this would be just perfect. Why? Well, let's do a Fibonacci retracement. And from the last lows, right now, Meta is currently sitting at the Goldilocks zone of 61.78 on a long-term retracement, which is just perfect for a strong company. It needs a retracement, and it needs a new possibility to have a new ramp. So what do investors do usually? They see a possibility, they enter it. Now, they're only entering it when they believe that the long-term thesis upholds. As soon as the long-term thesis fails, like we saw here, then they're going to reduce their shares and looking for their next leg up, their next promise, then they're going to reinvest. But this is not going to happen like that. It's basically going to happen something like this or like this, and so far and so on. So what we need to take into consideration here, first of all, is the mode of Meta is great, but they now have to demonstrate that they have that power. Let's go down to the dailies, and let's just see what happened here. So earnings came down, they broke every level, so the 20-day crossed even the 200-day moving average. But that's why I started zoomed out, and now we're zooming in. Because when we zoom in, it's terrible. The stock is all over the place. Who would invest in this? Well, somebody did. Somebody did right here when the RSI was down at 11. Somebody did invest here. Now Meta has to prove itself. Now, is this going to go up to the right? Maybe not. Maybe it's going to retest, just like we see here in the pre-market. The Meta closed on Friday on 647, depending when you're seeing this video, but it's clearly opening now on the Monday session at 641, opening down lower as its closing price, meaning it still wants to retest the lower lows, which will be probably the 633s. Now, if it comes down once more in this region, I already told you in my previous video that, let me just draw here a support zone for Meta, because we know that this was the April lows and it was never seen again the entire year. Even down here, we had these lows. Actually, I'm going to move this level up here, which was retested. This was the 2024 January, but it just bumped around there for almost 1 year. And it went a little bit further up, and then it came down in the April sell-off. Retested that, held its zone, went to its next leg up. Now it's looking to not even, so on this pullback, it's not even retesting the April lows, didn't even touch that 541 level, stayed way above it. Now, this is why I'm pretty much bullish on Meta platforms. Clearly, institutional investors and retailers like us believe that this is it. This is where we could see Meta making its leg up. Even if it comes down and retests that 560 to 480 zone would be a great buying opportunity. So currently at these levels, I would say, if you want, this is not financial advice, I'm not a financial advisor, you could lose all of your money. This could go to zero. But strategically, what I want to see is to come down again, retest these levels. If it holds the 630 levels, beautiful. Then dollar cost average into it, and then just let it ride. If it comes down, so don't sell your house and bet everything on Meta. Open a small position maybe, then let it come down, add some more to it, and then let it rest, see where it comes up, retest those levels, and from there we're going to reevaluate stuff because we are going into the next earnings, which is probably on the 4th of February. So buy, hold, sell. What should we do? Is this even the best time to buy Meta? When we balance the upper-related scale of the core business, the massive cash flow generation, and the necessary long-term strategic investment in AI infrastructure, the path forward becomes pretty clear. Now, my core thesis here, and we at WealthDom think that capital preservation first, then growth. The risk-reward profile has improved since the CapEx announcement panic, so since their last earnings right here. So the verdict will be a clear buy, but be cautious. Be cautious, let Meta prove it to you. Also, if you have a long enough time frame, 3 or 5 years, then that is an investment, then these levels are just perfect for Meta. Even if it comes down here, as I said, don't bet the house, let it come to you. Relative strength is currently showing up. Go into a deeper analysis, is kind of going towards the upper threshold of the Bollinger band, which is probably why it's coming down out a bit. Currently, the MACD has triggered a buy signal, and I'm pretty bullish right now on Meta. But on this pullback, let's just see where it stops, and if it goes further up, then that is the retest that we wanted to see. Then we can add some more shares into Meta platforms. Also, you can consider DCAing into a dollar cost averaging. Do not rush. Initiate a position at the current price, 640-ish. Looks pretty good, but save dry powder to dollar cost average on any dips towards 600, even lower. As I said, in this 680, 480 levels would be perfect long-term opportunities to add to some Meta stock. As always, the market fears the cost of innovation, and we at WealthDom see a long-term compounding opportunity of a profitable giant aggressively investing in the future. They need to invest in order to remain relative. Although this is not a fast-growing tech stock anymore, it is actually becoming a cash cow. So what do you think about Meta stock? Please let me hear your opinions down in the comment section below. I'm Norbert Menhart. I build and protect wealth. Please like this video. Help our channel grow. Help the community grow by becoming a member. Subscribe to the channel, and I'm going to see you next time. And also check out the before the bell analysis and my weekend edition where I went over my trades. So, in the next video. Bye-bye.